Hello, this is Christine Lucan, the Financial Lifeguard, and today I'm answering a fan's question. He asks, how do I maintain a good credit score with little or no debt? Now, you may have heard some financial experts say, if you're going to pay off all your debt and you're never going to borrow any money again, then you should just ignore your credit score, because your credit score really just measures how much debt you have and how well you pay it. Well, on some level, I agree with this. You really cannot ignore your credit score completely. And why is that? Even if you're not going to borrow money, your credit score is used by insurance companies when calculating your premiums. It is also used when you are renting an apartment or maybe renting some equipment. It can also be used for pre-employment screenings. Now, you may say this really isn't fair that they would use this information because I'm not borrowing money. However, there is a very direct correlation with credit scores and how responsible people tend to be. So they do use it for that information. So let's answer this question. If I don't want to borrow money, how can I make sure that my credit score is at least not hurting me? Well, if you have a mortgage payment and that's the only debt that you have, then you really don't need to worry about it, because that will be enough to generate a credit score for you that, as long as you're paying on time, is going to get you in the good to very good range. My husband and I have been credit card free for over a dozen years, and the only thing that we've had is our mortgage. Both of our credit scores are in the very high range, with just that debt being the only debt on our credit reports. The other thing you could do is get a secured credit card. And essentially that means you will deposit maybe $500 or $1,000 at the bank. They'll put a freeze on that money, and then they'll issue you a credit card with the same limit. The nice thing about this is that if you ever get into financial trouble, you can just close the account and they will take the money out of the savings to pay it off. Then you can just charge something like gas, a grocery trip once a month, just to have some activity on it, and then pay it off in full every month so that you have some activity on your credit report. Some credit unions actually offer a product called a credit building loan. What happens is you pay them a certain amount every month and they put it into a savings account for you. However, instead of you earning interest on that savings account, they actually charge you a small amount of interest, and then they report those payments to the credit bureau so that it almost looks like it's a loan, and it does have a positive impact on your credit score. So if you are a credit union member and need to build your credit up, you may want to check into that option. As a final option, basically, your worst case scenario is just to get one very small limit credit card and maybe just put gas on it every month and pay it off in full. That way you've got just a very small amount of debt that you're paying off on a regular basis, so it's not getting out of control, but you're still getting regular reporting to your credit score. I hope this helps. This is Christine Lucan, your financial lifeguard, signing off for today. We'll talk to you next time.